Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined again by Mr. Anka Sharma. It's nice to have a wingman again. Let's get into the week. In this session, we're going to talk about what happened this week. We'll take a look at all the broad markets, and the commodities market is really booming right now. So we'll look at all those things. We will score everything from a +3 to a -3, and we're going to take our strongest paired up against the weakest, and those are going to be the setups we look for this week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We did have a pullback in equities. It's the first pullback since the first week of January. So we have been due for a pullback for a while, and it came on just a one-day move. It was nasty. Thursday was a very, very nasty candle. And then Friday, we bounced back, and everything was back to normal, it seems. But we did get a pullback in equities. As I mentioned earlier, gold, oil, all had great weeks this week. And we saw that the US dollar went a little higher and bond yields moved substantially higher. In the cryptos pulled back in general, and we've talked about how Ethereum is just looking terrible. It does not look good whatsoever. We've been pretty much at a hold on cryptos as we've seen this pullback. There hasn't been a great bounce off of this recent pullback, so we just don't love cryptos here at the moment. We did get some manufacturing out of the U.S. We got U.S. manufacturing on Monday that was better than expected. But then we got ISM services on Wednesday that was worse than expected. So pretty much a washout, but both these numbers are above 50. And you can see the manufacturing one went above 50 for the first time in, I want to say, like 20 months. So this isn't a super strong economy. This is just a strong economy. I do want to talk about Swiss franc. Swiss franc has been our favorite short, and take a look at this CPI. That is a miss. That is a huge miss, and maybe that's why the Swiss National Bank has already started cutting interest rates, because this inflation is really coming down in Switzerland. And then on Friday, we got employment reports out of both the US and Canada, and you can see that the Canadian report was pretty lousy. Pretty lousy, lost jobs instead of created jobs. Unemployment rate ticked up. So we'll take a look at the CAD and see how it did. But the U.S. report was strong. U.S. report was strong, had a little drop in unemployment. And initially bonds spiked, stock market dropped. But by the end of the day, those had reversed. And the market looks like it has fully recovered from its big sell-off it had on Thursday. So let's take a look at the final numbers for the week, and let's see where we settled out. As you can see here, we've got the S&P down about 1%, the world index down about 0.8%. Cryptos got hit. They definitely got hit. We'll take a look at all the charts. Take a look at that gold move. That is a stunning move in gold, up 4%. Look, oil will go up and down 5% a week, but gold usually doesn't. That's just a fantastic move in gold. Let's take a look at this S&P chart. I really want to focus on Thursday's candle because we got a gap up and just a nasty sell-off. This is a nasty, nasty candle. And by the end of the day, I had people calling me. I had my neighbors saying, Rob, what's going on? Is there something I should be worried about? And I even did the end of day video for our options group. And I said, look, it's an ugly candle. It's a nasty candle. There's no question about it. But in the context of where we are, it's a pullback. This is still, we are not trading under certain key levels. And I said, and let's wait and see what happens Friday. Let's wait and see. And you can see we recovered some of it. We recovered about half of it, maybe 2/3 of it. In the grand scheme of things, this is still a pullback. That's all it is. The question is, was that the low of the pullback? And are we going to move up from here? Ankit, what do you think? Do you think we move up from here and break out to new highs?
You know, that's a good question here. And again, if you take a look at just to study the price action every little pullback is just getting bought out. So at this point, it makes more sense to be more on the long side than the short side. But at the same time, I want to acknowledge that the markets are sitting at these overbought levels as well. And I think that's what really makes it really tricky here. So I think price action remains bullish, but the question is how far higher can we go? So maybe we'll just go cruise sideways for a little bit. I think maybe that's where we are at. But I think next week when we get the CPI numbers, that could be just a nail in the coffin for either a big breakout or a turnaround. But I think until then, I'm kind of right in the middle here. I want to be on the cautious side, but I don't want to be extra bullish as well. So I'm kind of right in the middle there.
All right, thanks for sharing that. And I'm going to add in my 2 cents. I am more bullish today than I have been over the last 2 weeks. Why is that? We're actually lower today, and it's not because we're lower, but part of a bull market is to flush out all of the naysayers. And there's been lots of naysayers, and this market has ripped them. And what we need to see to finally get to a market top, what we need to see is capitulation on the bears, where they finally say, you know what, I've been fighting this too long, I'm going to jump in on the long side. A candle like Thursday, all the bears came out of the woodwork, said, see, we knew we were right. And look at that candle, just reversed against them. For me, I think the next leg higher is the bears capitulating, which ironically typically is the end of the move. So I think we have new highs just to frustrate these bears until they finally capitulate. Then I think we are in some serious problems for a pullback. But I'm more bullish now than I was 2 weeks ago in equities. Let's take a look at currencies because I really want to focus on percentages. These are fairly lousy percentages outside of the Aussie. I mean, they just haven't moved much. And we've been talking in our end of day videos, we've been talking about how this isn't a great Forex trading environment. And it's just not. It's just not. Yes, the Aussie was the best currency. Congratulations to those of you playing the Aussie, but everything else, very tall, very small, very tight moves. We come over to crypto and we'll take a look at all the charts. But you can see we had pullbacks across the board, but that Ethereum never really had a bounce, and then it just sold off hard. Let's go in and we'll take a look at everything. We'll give it market scores, and then we'll take a look at some potential setups. All right, we have this market at a +3. Now, technically, it's above the 20, it's above the 50. The 20-50 slope is moving higher. Look, if you want to back it off to a 2.5 or a 2, fine. The point is, it's still bullish. It's still bullish. Let's take a look at something that I think can potentially sink the market, is the bond yields. Now, 4.35, you can see 4.35 has been the point. And every time it's broken above that, it's fallen back down. Every time it's just fallen back down, sunk back down. We are going to close above that point. And I think everyone says bond yields are probably going to keep rising a bit. As long as they do it slowly, the equity market can handle it. What it doesn't want is a rip higher to 4.5, 4.6, 4.7. As long as it happens slowly, I think the markets can handle it. But I think the market believes that these yields are likely to creep higher. So look, we can take that and say that probably is a little bit bullish for the dollar. That's a little bit probably bearish for the cryptos. And here is the crypto chart, and you can see we had this pullback. And this bounce is pretty lousy. It's a pretty lousy pullback. I mean, take a look. You know, it took a little bit of time to get going, but we need to see this kind of price action. And we're just not seeing that right now. So take a look at what happened, a couple of weeks ago and say, okay, we might be in this point today, but we really can't buy anything until we break out to the upside. Right now, it is just absolute chop. So we're definitely at a hold on Forex. Let's take a look at the potential news events this week. We have 3 central banks. We've got the RBNZ. On Tuesday night, we got the Bank of Canada. Wednesday morning, and we got the ECB on Thursday morning. So lots of news coming out. None of them are expected to actually make any changes in their rates. Question is, do we get some changes in policy? For me, the most interesting one is the RBNZ. The Kiwi has been very, very weak. And it's been weak since the last meeting when the RBNZ basically came out, shot it. So the question is there going to be a change in policy? We haven't really seen better numbers out of New Zealand. What do you think, Ankit? Do we get a little bit of a move in the RBNZ, kind of like the RBA did? The RBA came out and they were a little bit hawkish. Think we get a hawkish move in the RBNZ?
That's a good question. Looking at the trajectory between the RBA and RBNZ, it seems like RBNZ is more on the dovish side compared to the RBA. And again, you can see that with the interest rate differential between the Aussie and the RBA and the RBNZ as well. So I think there is a room for RBNZ to be a little bit more dovish. So personally speaking, I'm more on the dovish side for the RBNZ than the hawkish side, but that's just really where I'm at. I'm not really seeing that in the economic numbers. I think there's other countries that could be just lagging behind in some of the activity here, but maybe they're just underperforming now. So I think the central bank's likely to be a little bit more dovish than the hawkish side. So I think if there's a bigger move, that'll probably be on the downside for the Kiwi.
I'll agree with that because, the numbers in New Zealand haven't gotten any better. So why in the world would the RBNZ suddenly change their outlook? So I'm with you. I think they're going to stay dovish on that outlook. We also have U.S. inflation numbers. So Wednesday, we get the CPI, and Thursday, we get the PPI. This is probably the biggest event of the week for all of the markets. US CPI is supposed to come in right at 0.3. That's where it's been. That's where the Fed wants it to be. If it's lower than that, all of a sudden, that's really going to excite a few markets. If this comes in at 0.2, the bond market's going to fall apart. The dollar is going to fall apart. The stock market's going to go crazy because what that means is we're likely to get our 3 rate cuts that the Fed has said this year. Now, this week, we had Kashkari come out and say, hey, if inflation stays up here, we're not going to cut at all. And that spooked the market. If this comes out at 0.2, it's going to be very, very bullish for equities. It's going to be very bullish. Again, dollars should sell off, bonds should sell off, or bond yields should come down. We'll have to wait and see what happens on this. In 0.3, I think it's a very non-event. 0.4, the opposite is going to happen. 0.4, the bond yields are going to spike and skyrocket. The stock market's going to tumble. So this is a big number this week. Other than that, that's really all the important things to talk about in this week's Outlook. So let's go ahead and take a look at all of the currencies one by one and give them our scores based on trend and velocity, and then look to pair them up. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? I'm going to take the cryptos here, and we're going to start off with Bitcoin. I don't hate this price action. I just don't. We've got higher lows, which are really nice. We got higher lows. We do have lower highs. So is it a wedge? Yes, right now it is a wedge. And what do we do with wedges? Well, wedges tend to break out. Now, it's a true wedge, meaning both lines are about the same slope. There is likelihood that it's going to break one way or the other. Which way? Well, this is off of a bullish move, so I'm going to put it like at 60-40. 60-40 on a true wedge. If we were like an ascending wedge, where the top was up here and we're coming up here, I put it 70-30. If we were in a rising wedge where it's like this, I put it like 80-20. So as you can see, it's not the kind of odds I like. Not the kind of odds whatsoever. So for me, I'm looking at this and I'm thinking, is this where I want to play my money? And right now it's not. If we can break out above this level and break out with some volume, I'm all in. I'm all in, ready to go. But until that happens, and that's really right around 72,000 on Bitcoin, I'm definitely going to be on the sidelines. Bitcoin Cash has been the clear winner here, and the pullback has not been terrible. We had a pullback, and you can see we actually had a nice move off of that. Crazy to say, but if I had to buy a currency right now or crypto, it would be Bitcoin Cash. That's where the momentum is. But beware, Bitcoin Cash is one that does nothing for a very long time, spikes, pulls back, does nothing for a long time. This is one of the best trends I've seen in Bitcoin Cash. It's usually much choppier than this. So just beware on Bitcoin Cash. Ethereum looks terrible. Trading below all the moving averages. Again, we are not getting a wedge pattern here on this. This is definitely not looking good. It looks like it's broken below. I'm bearish on this. I don't want anything to do with it on the long side. So that's a no on Ethereum for me. And Litecoin is the other currency that made a new high. It made a new high. It's pulling back, and it's giving us some patterns here in candlesticks that tell us that a bounce could be likely. Look, I'm not opposed to buying Litecoin either. And frankly, I like the trade in Litecoin better than Bitcoin Cash because Bitcoin Cash is very erratic. Litecoin tends to have some nice trends. Some nice trends that you can ride. So I'm really looking towards Litecoin if I'm looking to do a crypto trade this week. That's my favorite one. All right, Anka, take us through the Forex market.
Absolutely. Let's get started on the US dollar. Well, again, as we have seen, the dollar has been the better performer. The trend score hasn't changed, but still up +3. So again, at this point, today's candle looks a little disappointing, but at the same time, it hasn't really broken any sort of trend as of yet. I think this dollar is going to be the big mover this week, coming week, as we get the CPI numbers. Again, that's going to either break out or break lower. I think it has the potential to move the dollar and the bond yields, like Rob said earlier. So at this point, no change, status quo. I mean, velocity score 0 to +1. So you can see that this is, again, not a bullish or extra bullish right now or not extra bearish. I don't want to take a stand on this one until I get some data on it. So that's going to be focused starting Tuesday, but right now, no change as of yet. Now, the Japanese yen is on the other hand has been a bit of a mixed currency because there has been a lot of speculation for maybe an early move from Bank of Japan or maybe a possible intervention. But if you really block out that noise, you can see that the price, nothing really has changed as far as the trend goes. So again, same thing, a -2, and velocity again stays a 0 here. So no change on my bias for the yen. Now, Swiss franc, same thing, no change in the bias. What we're getting is some bear rallies in between. And guess what? Whenever you get these bear rallies, I get excited because I want to take a bit of a step back when I see these rallies. But when these rally fails, a great time to load up on the shorts. So overall, nothing has changed. I still like Swiss franc to the short side. I still think that the euro and Swiss franc possibly could get towards the parity level in the next coming months. So I think this still be a good trade here. On the other hand, take a look at euro. It looks so much better, both on the trend score, both on the velocity score. This is, again, something I want to be playing more to the upside than to the downside. So contrarian to the euro, the Swiss franc, I want to be buying those dips here and continue to be looking on to the upside. And on the same lines, the British pound doing the exact same thing as well. Remember, not a currency that you really want to short. At the same time, we don't want to be extremely bullish either because it's just stuck in that range. So whenever you see something that's just going sideways, it's just a good place to take a bit of a step back and just focus on what else is moving. I don't think the pound is the one that's moving right now. And if you go into the other currencies like the Canadian dollar, you can see that this is a currency that has been moving both on the upside and to the downside. So the real question is that, is this coming to an end or just a pullback? Well, if you take a look at the data, this especially between the US and Canada, I mean, US data is so much better compared to the Canadian data. So overall, I think the Canadian dollar could be a laggard here. So even though it looks like a nice little pullback, I think I still like dollar over the CAD here in this moment. And if it does break below those moving averages, I think then at that point it will lose that momentum and go more towards the downside. So I think that the Canadian dollar could go really either way, but the data is pointing more negative versus positive. Now, the Australian dollar, on the other hand, which was just stuck sideways, is now moving nicely. Again, could this be because the gold is moving nicely? Again, the commodities moving nicely, possibly. But again, remember, those are just the reasons. But if you just take a look at the chart, the chart's telling you that it wants to go higher than lower. So again, things that have been stuck for a longer time are now running. And whenever they start to run, we want to be looking into those runs as well. So I still like the Aussie here. Any pullbacks that I get, despite of what's happening in the equities, the Aussie is still staying strong, which is again a good sign. And then at last, if you take a look at the Kiwi, what a divergence that we're getting here. Remember, for most part of last year, the Aussie was the one not performing well, and the Kiwi was doing well. And that's totally flipped upside down. So I've been really advocate of Aussie Kiwi long, and that trade is just working for almost a month and a half and two. So there's some trades there diverging, and they're diverging really nicely. So I want to take advantage of divergence, which is, again, Aussie Kiwi. So right now we're just getting a rally in the Kiwi here, but at the same time, trend score, nothing really has changed. So we just want to be looking more on towards the downside, especially if the equity markets weaken. Again, we don't know where the market's going to go next week, but any weakness that we get in broader markets, I think Kiwi probably be better short. So I think stay tuned until next week, especially with the RBNZ as well. Any central banks that we get can really change the trajectory of the currency that we have seen from other central bank announcements. So we're just going to continue looking at that, and once we get some confirmations, we'll probably continue with that trend score.
Thank you, Ankit. And here is the trend score, and this is a great board because if you think back of where we were a month ago, everything was in the middle. Everything was in the middle, and we said, hey, until things break out, we can't really play things. Then things broke out, and then they didn't really go anywhere. So where we've been for the last 3 weeks is we've had these breakouts, and other than just a few currencies, they've really moved, but we constantly are getting velocity scores like this where, yes, they are breaking out, but they're not breaking out and running. We got a lot of stuff that's just not moving. So we've had to be very, very focused on what is actually moving at the moment, what actually is moving. And you can see when we take out all the +1 to -1 trades, we're left with 3 things to look at. Bitcoin Cash, which I've talked about, I'm not really going to take a look at. Let's look at Litecoin, and let's look at the CAD Swiss franc short. Those are going to be the possible trades I think we're going to start the week out with, and then we'll see how the market develops, and we'll potentially see some changes and some better trades there. I'm going to start out with Litecoin. And let's really just talk about levels. Where are the levels? Where do we want to actually get in? And I talked about how we're getting this pullback. We're getting this nice pullback, and we're getting into this support level. Take a look at this last 5 days. We have received buying. Anytime it's dipped below 98, the buyers have come back very quickly. Now look, it hasn't been running, but every time it dips below 98, the buyers come back in. That's telling us that, okay, it's not ready yet, but people are starting to nibble on weakness, which is typically a precursor to when it reverses and starts moving higher. When is that going to be? For me, that's a fairly tough call. Let's take a look at a 4-hour chart and see if we can find some sort of trend line to where we can actually set up some potential places. All right, we touched it here, we touched it here, we touched it here. So I'm looking at this trend line saying, somewhere around this 101.60, 101.50, somewhere in here, I think I can start to get a little bit more excited. But take a look back at what happened back here. Touch through them and then pull back. I want to see a breakthrough and then a pullback and then buy that. That is a while away on Litecoin. If you take a look at it, and I'm talking about at least 3, 4, 5 days for that pattern to develop. So for me, Litecoin is just not there yet. Just not there. Let's take a look at CAD Swiss franc. As you can see here, CAD Swiss franc has been moving up, but that's mostly been from Swiss franc weakness. The big question is, right now on our velocity scores, we have Swiss franc that's having a bounce, and CAD is having a dip. Right now, these are the most opposite currencies on our velocity board. Here's the problem. On the trend scoreboard, they were pretty much the same. It's not a trade I'm looking to make. I don't even want to get into numbers here because it's just not a trade. I need to have more things match up. I would much rather be in something like Aussie CAD or in something like Aussie Swiss franc. Now, I've been talking about Aussie Swiss franc for like the last 2 weeks about how this is the only trade I like in the market. And I'm going to continue to say it. It's the only trade that I like in the Forex market. Had a nice breakout here, but sunk back down. Look, these are opportunities. These are pullback opportunities to take new positions. You can see we broke out, we ran, pulled back, and we're holding this point. We're not bouncing off of it. It is a Friday. But I want to start to take a look next week to see, can we move out of this area here from this 59.55? Once we start moving out of that area, I can definitely start looking at some new positions here. Ankit, what do you want to take a look at?
Well, the first one that you already looked at was the Aussie CAD. I mean, I really like this one. Like I said, if I have to go pick between dollar and the CAD, I think CAD could be in a period where it could just experience some weakness here. So again, beautiful resistance level right there off this rally, 4-day run. But again, now if you take a look at it where we are, is this a clear breakout? And if that adds on to the gains, I mean, we can easily get towards that 90, 50 to 91 area. So again, we have some overhead resistance, but once we get above that overhead resistance, there's better reasons for that to rally higher. Aussie Kiwi is the other one that I've been more on the long side. As you can see, this is just a trade that I keep giving. So I have questions from traders that, hey, I've been holding this, or, I want to get in. Like, what should I do here? Again, take a look at some of the longer-term charts, like a weekly chart. Rob, you want to point it out that this is, again, a level that is getting towards about 110. So the only hesitation to get in right now is because of that resistance. Let's say if next week we do get a further break above that 110, I think there's some good reasons for this to kind of rally higher as well. Again, this thing has been stuck in the sideways range for almost year and a half. So once we break out above that, I think there's a good reason to rally as well. So again, RBNZ is the one that I'm looking forward to next week. And then once you get that clarity, this again will be one of those pairs that I'll be taking a look at as well. Now, outside of that, Rob, I'm on the same point. Aussie Swiss franc, I think, looks great. Again, if you just go on the longer-term charts, you realize that how depressed some of these currency pairs have been. So if we think that this is gone too far, just look at the broader markets and the higher charts. They have some room to cover. So I like the fact that some of the longer-term trends are turning in this Swiss franc pairs. I think there's a little bit more room for this to run. So now talking about strategy next week, I am looking to be more active around these events, looking at what currency is going to be in play. And again, next week we have a lot. So starting Tuesday, I want to keep it powder dry on Monday, but really started with the Tuesday on CPI and kind of build it up from there. So there's definitely a lot of currency pairs like dollar Swiss franc. I've been more on the long side. And again, if the dollar stays stronger, I think the dollar Swiss franc still looks like a decent candidate. It hasn't broken below the moving average there, still above the parabolic star. I mean, we just have to see if this is just a basing pattern or is it really turning lower. I don't see it really giving me a clear signal, but breaking higher or lower certain key levels would really spark that move. So that's really what I'm looking at. I'm excited for next week. I like the way the currencies are moving. We just need to be in the right place at the right time. And I think next week will provide us plenty of opportunities. And Rob, the last one I want to pull up, I had a lot of questions before is dollar yen, because I'm sure, Rob, you have had some questions on dollar yen as well. Technically speaking, what a beautiful high base pattern. At the same time, we have all this sort of a fear of bank intervention. So this is a question really, if this breaks out above that 152, would you buy? From technical standpoint, this is a very good high base setup. So I don't know, Rob, what's your opinion on that one? But technically, this could be the one that could possibly break out on the upside if the dollar gets stronger on the CPI report.
I talked about this on Friday morning at the payrolls report, and I said, you don't want to be in this trade when the Bank of Japan is open for business. But outside of that, I think it's going to be a great trade. I think, let's say that it breaks out when the Japanese banks have already closed for the night, and it breaks out in the U.S. session. I think it's a great time to jump in it. Do I want to hold it overnight into the Japanese session where the Bank of Japan might come out and intervene? No. But you're right. When this thing breaks, it's going to have a nice pop, but I think that pop is going to be fairly short-lived. So I think, if it goes too high, the Bank of Japan will come in and knock it down. And if the market thinks that's going to happen, the market will do the work for the Bank of Japan to knock it down. But if the market thinks that the Bank of Japan is asleep, which they will be at that time of day, we might see a nice little run on this. I think this one is a decent candidate for a short-term trade. It was nice at the end of the week to see currencies become a little bit better. So I'm going into this week as well with Onkit with a little bit more optimism than I did last week, because we did see much better price movement at the end of the week than the beginning of the week. Keep an eye out for those news events. Everyone have a great weekend. Take care. Goodbye, everybody.